Good morning, everyone. Welcome to another Clarity Edge video where I help you stay on the right side of risk in global markets by helping you align with the primary trends within the markets. As always, we're going to begin with Bitcoin. Taking a quick look here. You're checking the sound. The sound is working. Great. I just recorded the video yesterday with no sound, so that was a waste of time. But no, we have the sound here today. Okay, so Bitcoin, following up on yesterday's video, do we have any significant developments? If you guys want more of a deep down breakdown of the higher time frames on Bitcoin, make sure that you check out yesterday's video. Right now, what we are seeing is, let me take a look here. We have the range right here. Let's see, let's add the short reload zone here. We're going to add that resistance. So right now we have a few things of interest. We have the range high at around 73, this level right here. And then we have the range EQ at around 68.5, and then of course the range lows at around 63. The important levels that comes into play here is basically the range high area and the range EQ area. Bitcoin is obviously range bound for now. That's not much to say about Bitcoin right now. As a swing trader, of course, I'm not trading this type of price action right here. I'm more interested in the swing moves here on the daily and maybe perhaps the weekly. So what are we seeing here from a local perspective? Obviously we're seeing higher highs and higher lows, but that does not matter because we are in a range. Context matters, right? Context is all that matters here. On the daily, we are seeing a rejection here at these highs. Let's add the accumulation distribution indicator to see what the volume is telling us. The accumulation distribution indicator is telling us quite a lot here, right? We have sellers absolutely dominating the current structure right here on the 4-hour. On the daily, we are creating, you know what, like, yeah, it's not looking great on the daily as well. We're not creating any meaningful structure that tells us that the bulls are in control. I mean, if you look at the overall structure here, yes, there has been buyers have dominated throughout this range right here. So there might be a sign that there's more buying than actual selling in this range, looking at the way volume and is behaving according to the candles here. But what I'm interested in really is like the divergence here between the indicator and price. So you have higher highs here and higher lows on the indicator, which does there's a clear divergence here on the breakout. That was a weak breakout, and that's something I reported on. As soon as we got that breakout, I said this is a weak breakout. There's no volume behind it. You can also look at volume right here. Volume has been falling all throughout this so-called local uptrend, right? So there's not a lot of buying pressure here. It looks weak on Bitcoin. Okay, that's just my quick update on Bitcoin. Just to summarize, for me to be interested in Bitcoin, we need to break above 73 or perhaps break below 68. But honestly, I want to see like a confirmed breakout here and then short the 80 to 85K region. What's next? Let's take a look at, have we looked at this one yesterday? No, we did not. We haven't looked at this recently. We got the higher time frame view on the Dixie, the dollar currency index. That's the US dollar, right? We can kind of zoom out here. This is on the monthly, and what I'm seeing on the monthly is obviously a sort of like a long-term downtrend, right? But then if we zoom into the weekly, we're seeing a local uptrend while still staying at the very top of that long-term downwards trending channel. But I still feel like this is the dominant trend. Like this is the dominant trend, right? The primary trend. And what is the primary trend telling us right now? Well, it's actually showing the exact same structure technically that we've seen every time we created a long-term bottom here for the dollar. I'm not saying the dollar is going to bottom out here. I'm not saying the dollar will go higher from here, but what I am saying is that I would not be surprised to see a dollar going higher from here, because we are starting to form what I view as an accumulation range right here. And if we do break out here to the upside, that would signal that it's a flight to safety. It would probably signal that we potentially going into a recession type of a bear market for all risk assets, including Bitcoin. And if that happens, I mean, if the dollar currency index is going to break out here, we know what's going to happen with Bitcoin. We can look at the relationship between Bitcoin and the dollar currency index right here. That is Bitcoin in orange and the dollar currency index in blue. Of course, whenever the dollar currency index puts in the bottom, there's a top in Bitcoin. That's pretty obvious relationship. And so if the dollar currency index starts moving higher, I do think we're going to get that move to the downside on Bitcoin. And then, of course, the higher time frame levels that we have been watching here on the channel. By the way, if you like it, hit the like, subscribe, do all of that nice thing. Hit write a comment as well. I got a shirt on today. Look at that. Looking good. I dressed up for you guys. So I do appreciate if you take note of that and write a comment saying, wow, Jonathan, you look absolutely beautiful today. What type of shirt is that? Well, I don't know what type of shirt it is, but it's white. It has lines on it. And if I do this, it's a horizontal line. It's not a horizontal line now though, but look, trend line. Anyway, so if the dollar currency index breaks down here, if the dollar currency index breaks up, then yeah, I do expect Bitcoin to move significantly lower. And then what we're looking at in that case is this. Yep, this is what I'm looking at. The Dow theory thing that we have here. Yeah. You know what? What I'm gonna do is, let's just. You know what? Let me know in the comments what you think is best for you guys, because what I can do is just end the video right here and then upload this as a short update on Bitcoin, and then record another video on the rest of the markets. And this is because I know that some of you watching this channel, you're only really interested in the crypto markets and Bitcoin. So if that's kind of like what your interest is mostly in, then let me know if that's the case. If you're only interested in Bitcoin, I can just upload a separate video on Bitcoin. But what I'm planning to do here is to have a very clear template and a very clear structure to go with, where we always begin with Bitcoin and then we go over into looking at some Forex setups, and then we look at the indices, and then we look at gold. So so you'll know in what order that happens. So if you're only interested in Bitcoin, you can skip the rest of the video. But you know what? Let it run in the background. Is to activate that YouTube algorithm. We could trick YouTube that you're actually interested in the rest of the video as well. Right, okay, so Forex market. Okay, let's go to the green list here. What do we have here? We're just gonna cover the top of this list right here to kind of show you guys, update on if there's any developments on some of the ideas we looked at yesterday. So we got Euro GBP right here. Not really seeing much of a development right here. I'm just going to put an alert on here to kind of alert me if something goes on here. Again, we want to see a break below this level right here for a potential short. We got AUD NCD at my entry on the second trade of second. I'm probably going to be buying more here. Yeah. After because this just looks very good, doesn't it? Let's add the RSI here as well. I like that, how it's still holding above the 50% level right here. Looking very good, has not broken down. The trend is very much alive right here. Adding a local fib might be helpful here as well. Yeah, look at that, right on the right inside the reload zone right here. Let's take a look at volume. Good volume, like that. We're getting a lot of volume coming in here, kind of supporting that level right here. We have increasing volume throughout. We're potentially getting some, potentially getting some divergences here with our side. But I mean, overall, it's looking pretty good. I got to be careful here though, because I'm in a position I want to add more. So I need to be careful in my biases here, right? I can't be, because there's this thing, First of all, if I'm in a long position, I might have that more bullish bias, right? Where I'm looking for reasons to stay in the trade or looking for reasons to buy more. Now I had to flip that, right? Because for me, it's all about risk management. So I had to think about terms that, you know, in terms of what dangers is there to this trade? Like how can I make sure that I manage my risk correctly? And of course, now that we're forming a new swing low on the daily, or potentially forming a new swing low here on the daily, it creates a wonderful opportunity for me to manage my risk, right? By tightening my stop loss here if we get a move to the upside, you know. Beautiful. Accumulation distribution right here is still showing us a structure of higher lows, could potentially be forming a like lower high here. There's definitely something to keep in mind, because I believe we are getting very close to the end of the trend, right? Now, I wish I would have just held this position, but I didn't. And one of the reasons why I entered this trade again is because the trend is still alive. And for me, it's all about following the trend for as long as possible. But I do feel like I start kind of seeing some signs of the trend weakening. So I got to be careful here. Maybe I should wait maybe one more day until I add to this, right? And maybe I shouldn't add at all. Maybe the play is just to limit risk here, because you can kind of like, you have to think about why are you thinking the things you're thinking. Are they coming from your analysis, or are they coming from your want and need and desire and greed to make more money? And I feel like maybe in this case, I should just limit risk, because I'm in a position, I've risked, 2% of my account on this trade. If I add more here, I'm simply just risking more. So I need to first limit my risk on this one before I can add to the position. So what I'll do here is I'll zoom in, and there you got like live an example of how I think when it comes to risk, and how I kind of try to structure my thoughts in the moment and plan what to do. So I started with one idea, is like add to the position. I'm going to add to the position today. And it's like, wait a minute, think, is the analysis supporting that? Is that emotional decision? Most likely emotional. I'm putting an alert right here that would tell me that we have buyers stepping in and potentially pushing this higher. Okay, EuroCAD. EuroCAD has hit the midzone of the long short real zone right here. I like this. I like it a lot. Looking for shorts here. When will I short? I'm not really sure. Yesterday's daily candle closed but beautifully actually as a bearish candle. So I'm just looking for confirmation here, right? So this one right here, is that a it's not a hanging man. It's not a hammer, because hammer happens at support. What is this? I should know that. Anyway, whatever. That's a bearish candle, right? And I like how it has the wicks right here. It's indecision, kind of holding and holding that resistance. Got the 20, the EMA here on the daily as well. So I like this. I like that. This is good. Now, if the current daily candle can close below the low of the wick of that candle, it confirms that candle. And as you can see right here, you have like one bearish candle up, one bearish candle up, and then you have one bearish candle maybe up again. So what we want to do here is I want to see that the current daily candle closing below the wick of the previous candle, and then I will enter a trade on there. And if that happens, I can also have a much tighter stop loss. Okay, moving on. GBP AUD. Beautiful, beautiful, beautiful. Beautiful. Okay, I'm gonna buy. I'm gonna look for a pullback on this one, and I want to buy this because I feel like what I need confirmation on here is really beautiful bullish divergences here as well on the RSI. Again, this is good. This is good. Okay, so what I need confirmation on here is confirmation that this is just not a relief rally in a bear market, and this is actually, and look at the volume coming in here that this support as well. Yeah, this is beautiful. I think we have the beginning of potentially the beginning of a new trend here. So we have a new higher high. Now what I'm looking for here is a higher low. So maybe a move like this. Okay, obviously price can't move like that. That's weird. So move that. But if I have a move like this, right, then why am I doing this? I like doing that. So okay, so that's visual representation of my plan for this trade. Okay, you can understand. I want to get a dip, buy, boom. Next one, GBP CAD. Again, looking for a, you know what, this is no longer interesting. I feel like, where is it? Nah, it's kind of interesting, but I need to get way more confirmation on this one, because it looks like now potentially it has re-entered that range. And is it distribution? We don't know. We don't really know. Maybe this is just a deviation below the range low, and then we're inside the range again. I'm not really sure. I'm gonna keep it on the list. Let's move on. GBP NCD, beautiful, 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 beautiful. Okay, are we in a? This is the question here, right? Are we in a? Is the primary trend bullish or bearish? Well, looking at the moving averages, we have broken the behavior of this trend. The momentum has been weakening significantly. We've had good volume on the move to the downside. Accumulation distribution indicator broke down. It has now recovered. RSI is back above 50. Price is back above the moving averages. Now, what we need to see here, or what I need to see, like, again, this is a big move. We're looking at a potential of a 1,200 pip move to the downside. That, is a quite significant move. It's a 5% move on the downside. We're talking about the Forex market. This is not an altcoin in crypto. This is the actual Forex market, which means a 1,237 pip move to the downside. Yeah, it's a big one. So we have time to obviously we have time to prepare. And what does preparement look like? Oh, something like this, right? A little bit of a lower swing high. That's what I want to see. Beautiful. Okay, let's see if we can see. Let's see if we can see that. Let's see if we can get that. GBP CAD. Did I just watch that one? This the one I watched? Why do I have two GBP CADs here? Let's move that one. Okay, that's all for the Forex market. Now let's move on to the S&P 500. Just taking a look at the broader market conditions for the S&P 500, and then we're going to move into the. We're going to take a quick look at gold as well. Right. Okay, so we got the S&P 500 right here. Now I want to share with you. I posted a article on the Prime XPT blog, and I'm just going to pull that up. I'm just going to pull up those charts instead, because I don't have them saved here. So this is one of the charts, right? And what I want to show you on this is the potential that we have. So this is the S&P 500, right? So you can see right here on the at the end of the previous bear market, we obviously had that accumulation, and now we're looking at the potential distribution range forming right here. The white line is, so this is the weekly chart, but the white line is the daily 200 simple moving average. We have broken down the 200 simple moving averages, and as you can see, that most of the time happens before we enter a bear market. We can see here on the accumulation distribution range, accumulation distribution indicator, that we have broken down significant right here. We do see that RSI is now within this bearish range. You can see here in the bear market of 2022 and 2023. We established a RSI range below the and this is why it's called a bearish range, right? When the market is bearish, RSI tends to be trading below 50. It creates like a range below 50, and then when it's bullish, it creates a range above 50. And now we have entered that potential 50% below 50% the bearish range on the weekly RSI. And then zooming into the daily. By the way, if you want my analysis, I do post on the Prime XPT blog every day, every morning. So you can go to the primexpt.com/market-research. I'm gonna add a link to today's article in the description of today's video, so you can check it out if you want. Now here is on the daily, where you can see this is the potential distribution range. You can see the daily time frame. We have the RSI within that bearish range right now. And the volume has been picking up here all throughout this move to the downside. So volume is confirming price, RSI is in the bearish range, and we have had a bearish rejection of that 200 simple moving average, right? So it's quite weak, it's quite bearish, but we are still holding within the range on that support, but it's not looking great for the bulls here. And if the S&P 400 breaks down here, I mean, that's the stuff of, you know, recessions, right? Like that, at that point, we're in the bear market, and then, you know, Bitcoin's going to break down, gold's probably going to break up, and, you know, if the current situation in the Middle East accelerates, oil probably going to move higher, and we're going to have a tough time. It's a good time to stay in cash. Now, let's go into the 4-hour, because this is the most interesting price action right now, right? So we have two levels. We are potentially forming a range here on the S&P 500, and if we break below this range right here, the range lows, which is around 6,520, if we break below this low, then, you know, probably for the intraday traders are probably going to look at taking profits down at this low at 6,440. And then if we break above that 6,600 level as resistance, you know, we're going to enter that range again, and maybe we'll see some more strength coming into the market, and maybe that's going to spill over into Bitcoin as well, show some strength for Bitcoin. Okay, last but absolutely not least, we're looking at gold here. Okay, so one thing that I've been looking at here on gold is the this kind of local structure right here where we have, and it kind of turned out quite nicely, didn't it? So where we have this type of structure, and we have sort of a gap between this support resistance zone and the resistance above. If we go to the daily here, we can see that we do have two important levels here for gold. And if we can hold this 4,200 to 4,400 support level, I do see it fairly likely that we might hit that 4,800 to 5,000 resistance. But if we break down here and we break the daily 200 simple moving average, it looks very, very bad for gold, and we're probably going to have a much, much deeper drawdown. We can also see that this is the first time we had a significant move to the downside and the 20 EMA crossing below the 50 EMA on the daily. That has not happened since basically the beginning of this uptrend. So gold is looking very bearish. And for those of you wondering, why is gold bearish when we have a lot of geopolitical uncertainty? Well, it's not just about gold being a hedge against geopolitical uncertainty. The U.S. 10-year Treasury yields went up quite a lot, which means you'll make money by only holding the dollar, basically. Right? So the yield of holding bonds goes up. So just holding dollar gives you money. It's a very safe investment, and gold is a non-yield bearing asset, which means holding gold will not give you any interest or any yield, right? You will only make money if it moves higher, and people are looking at gold as a safe haven and a stable safe investment. But if you look at gold on the weekly, it is now trading more as a speculative assets, right? So it's no longer trading as a currency. It's more like now trading like a high beta commodity almost in this current cycle that we are in. So people are quite fearful of big drawdowns on gold. So they're might not be very interested in, you know, parking their capital in gold, while there's other safer assets out there that will give you yields on just holding them, and they're more stable. Right, okay, guys, that's today's video. Let me know if you like this daily short update. Well, this one wasn't very short, but it is what it is. Half an hour video every day, that's pretty good. Let me know, guys, if you like this. Hit a like, subscribe, and leave a comment if there's anything specific you want me to cover. Thank you for watching. Thank you for your time, and we will see you all in the next one.